Gorakssakar, Head Research at Precision Investment, joins us now. Avinnash, I'm going to start off with the markets. As I was saying earlier, we are about 500 points off the highs that we touched in the beginning of this year. That's when the crash really happened. Is there anything that indicates that we might be, scraping the bottom and ready to pick up, or do you think volatility is still going to continue?
No, I think at least for the time being, I think probably, as long as there are no global kind of shocks, I think the markets would continue to trade between say 74 to say 7600. And clearly, I think one theme which is very visible from the FIs is I think money is flowing out. The dollar is appreciating. So obviously, going forward, what stance the Fed takes and what incremental, rate hikes the Fed announces is going to be a key trigger for the Indian markets as well as other emerging markets. But from an earnings point of view, Mini, I don't think FY17, the first half, is also going to be anything great. Our internal assessment is earnings growth could be about 10-12%, Sensex EPS could be about 1500 rupees. So markets are not extremely cheap, they are fairly valued. And I think clearly, trouble sectors like steel, construction, infrastructure, real estate, I think we need to get a lot of good news in the budget because, the GST has not come in. I think markets are awaiting that at least in this budget, sentiment-wise, at least the government announces a lot of investment for infrastructure-related sectors. And if that happens, there could be a slight push because clearly GST has been a big disappointment. And I think if it doesn't go through now, it could be another 6 months of delay. So probably, the market is just looking at the fact that some global news doesn't come negative. I think markets could probably remain in a close range, but no big positive surprises.